Yeah, I do. I don't see any reason why not to, because you're in fact going into Apple's most important quarter, which is their fourth quarter. And that's when typically revenues are up about 50% sequentially from September to December. But that, of course, assumes that people want to run out and buy iPhones. And I think what you've seen coming out is that there's only so much you can continue to raise prices on iPhones when you've got a lot of the markets that you're trying to sell into running into issues like China or Brazil or India, and expect to get away with that. So my belief is that the fourth quarter sales of iPhones is going to be less than expected, and I think what you're seeing today with Lumentum cutting their estimates just 11 days after they already lowered guidance when they reported, is that things are definitely running worse than what was expected.
But how big was the downgrade for Lumentum and how much does it impact Apple, or imply an impact for Apple, and which iPhone models in particular?
Yeah, that's a great question, Wilfred. So if you look at Lumentum, what Lumentum provides is they provide the 3D sensing lasers, or pixels if you want, and they have over 90% share. And what's interesting is this is used for the facial ID. So it only first started to ship late last year with the iPhone 10, and it's in all three new models. So this is particularly important for how well are the new phones shipping. And when Lumentum reported 11 days ago, they lowered revenues relative to where the street was by about 3%. Today, they're cutting those estimates by 17%. But what they said in the press release is this is related to 3D sensing, and that's code for pretty much Apple. And so if you look at that, it's really a 40% cut to revenues going into Apple. And so that's a huge number. And when you take about $3.50 ASP per unit sold to Apple, it's about a 21 million unit shortfall. So that's a pretty big deal when you consider they already cut numbers 11 days ago, and now they're cutting them by about 40% for just the Apple-related business.
Hey, Dan, obviously when Apple decided to stop giving specific numbers on iPhone sales volumes, they knew that it wasn't going to stop this game of people on the street trying to, sniff out changes in the supply chain and inferring what it means for iPhone. Do you think that the market, though, can get past this, or maybe at a certain share price for Apple, it will be able to get past this intense focus on that and just sort of do what the bulls say, which is rely on the fact that Apple's a big ecosystem and there's a lot of kind of services, annuity-type revenue and things like that?
Yeah, I think the market shouldn't get by this, and quite honestly, the bulls are wrong. I mean, because here's the way you have to think about it. You have an ecosystem. Well, what's the ecosystem built on? Customers. Well, what's your biggest product you sell? iPhones. So what does this tell you about how many people are buying iPhones? You can't sell services to somebody if they don't have an iPhone. So services is a lagging indicator. It's not a leading indicator. And if you're selling that many less iPhones to users, you can't sell them services. So, and I think that's what people are not completely wrapping their heads around. The other thing is you have to remember, well, what kind of services and what are the margins on those? So everybody is obviously excited about Apple launching a streaming service that competes with Netflix. Well, how profitable is that going to be? Well, Netflix has 140 million subscribers, and they're losing $3 billion in cash flow this year, and they're forecasted to lose $3 billion in cash flow next year. That's not going to be good for Apple's numbers, even if they do get that services piece, because Apple obviously is not going to start with 140 million subscribers on day one. So I think the problem is that the bulls need to actually sit there and think about, well, gee, if units are going down by this percentage, well, I obviously can't sell services to people who don't have an iPhone. Maybe I need to rethink my services numbers because, by the way, the services revenues are decelerating. So you had combined services and other revenue of 33% both the March and June quarters. That went down to 28% in September. So that number is also dropping, too. It's just not dropping as fast as the iPhones.